So what type of credit score does a person need in order to qualify for a fix and flip loan,
That's a
a
great
hard money
question.
loan? Yeah.
That's a great question. So it depends on, there's different levels of hard money,
Okay.
but the bottom line is we can actually do a hard money loan. It doesn't matter what your credit score is in many instances.
Ooh.
So that's another huge benefit for a client who finds a good deal and wants to take advantage of it. So they may have some credit challenges themselves. They may even have some income challenges. They may not even have a job. We don't care. You
Wait,
don't need a
Kurt.
job.
What? This
I
this
know.
this
It's
sounds too good to be true.
it almost is, but you're operating on a different premise. So you're not operating on the premise that a bank is looking at your information.
Yes.
You're operating on the premise that the private lender is looking at you making money and them making money. It's a
Because
win-win
that's the bottom
situation.
line.
That's the
Right.
bottom line. Everybody wins in the scenario. So they want you to have the money to take advantage of the opportunity so you
Okay.
can make money, but also in the process, absolutely they're going to make money as well. So again, it's a win-win.
That is amazing. So a person coming in, they come to me and they say, Miss Camille, I've seen you in the Flip Squad
Yes,
and I want to do the same thing. How do I get started? And the very first thing I say to them is, we need to talk to Kurt.
that's right. That's exactly right.
So what kind of questions do they ask you when they call you?
Well, that's a great question. It's a mutual conversation. We're trying to get an understanding of what they want to understand what's involved in the process on my side, and I want to understand what they're trying to accomplish.
Okay.
So I'm asking them questions like, okay, what, like, how much money are you anticipating making on the deal?
Okay.
I want to have an idea what that kind of looks like. How much money do they actually already have to work with? Because there is money. There's some scenarios once you have experience that we can actually do the deal with no money into the deal. But that's not a normal situation when
Okay.
somebody's first getting involved with this type of transaction.
How many deals do you feel like is the average amount before they don't have to put money into it?
Average is about 3
Oh,
within a
wow.
36-month period.
Oh, so they have to go quick.
Yeah,
They
they
have
want to see that these private lenders are looking for people who have experience. I mean, even though the interest rate's higher, they're still taking a risk. They're
for
taking a
sure.
risk. So they want to know, and a big part of that is the more experience you have in the process, you understand the process. You understand what's involved. You understand that you're going to need some contractors, depending on the scope of work that you're going to be doing, that they have to perform. I mean, what if it rains? What if they're not on time? And
Yes.
there's different delays and things like that that are outside of your control.
Right.
Well, people who are experienced, they understand all of that, and they have a
Yes.
backup plan or contingent plan to
Right.
that. Somebody who's new, they're not really thinking about that.
Right.
But the lender, they know about all of this.
But
Because
ideally, we want to get in and get out before that first mortgage payment is due.
I love that situation when you're looking at what I call a mop and glow.
A mop and glow. Oh,
A
yes.
mop and glow.
And I call it what do I call it? A
You,
lipstick.
you call it lipstick.
You call it mop
Lipstick.
and
I
glow.
call it mop and glow.
Uh-huh.
And that's really where you're looking to do some light work to the property.
Yeah.
You're not moving walls. You're not really
Having to get permits.
Oh no, absolutely not. Yeah,
Right. Literally
that's a
aesthetic
it's
upgrades.
there you go. Maybe some paint.
Light fixtures, carpet,
Exactly.
change out the floors, maybe
That's
some
right.
countertops.
Absolutely. And if you want to update a bathroom, that's fine. Some updates, that's fine too. But that's really kind of the extent of the type of work that you're actually doing in these situations.
And you mentioned that with these hard money loans that the interest rates are higher.
Yes.
So comparative to, give me an example numerically.
Anywhere between 8.5% up to about 12.99%. So it all depends on your experience. It all depends on your credit score is relevant to that rate. So if you have a terrible score, we can still do it, but you will be on the higher end. But what I like for people to really understand is, even if you're on the higher end, let's say if you had a 12.99, it's interest only.
Interest only.
And you're only paying that interest for as long as you hold the property. Here's the key. If you can get in and you do a mop and glow and you pay 2 payments, you paid nowhere near the 12.99 because the 12.99 is really for a 12-month period of time.
Right.
It's 1 year's worth of interest. But if you're only in it for 2 months, that's 2/12 of the 12.99. So you're paying a fraction of that interest.
So what is the normal time, the normal length of time that the hard money loans extend for? It's
So
not 30 years,
no. They're short term.
right?
They're get out type of money
Mhm.
transactions. Say 6 months. It really depends on what are you doing to the property, the expectation, how long should it take you to get in and get out. What I typically see, especially in this market, most people are in and out more sooner than 6 months. Usually 3 months, especially if it's a mop and glow. 2 months, might say 90 days, they're in and out. That means they bought it, they fixed it up, and they sold it, so they got their profit.
That's quick.
That's very quick. So that's
very
that's
quick.
another reason why, in particular, I really like the mop and glow scenario, especially for somebody who's new to the
Absolutely.
business, because they don't want to. I mean, I know that you watch the fix and flip shows on TV and what that looks like and everything, but the reality of what's going on here is you want to be in the best position. You want to set yourself up for success.
That's right.
You want to build some confidence in these transactions. The best way to do that is not going in, knocking down walls, and getting permits.
Yes.
The best way to do that is again, what you call the lipstick, what I call the mop and glow.
Absolutely.
Get in there, do some light work, get it fixed up, and get it sold, make some money.
That's right, because the fact of the matter is from the time you close to the time that the loan is due. Explain how that works, because the whole balance is due at the end of the 6 months or the 12 or 13 months with these type of loans, correct?
That's right. So the money, it's short-term money.
Mm-hmm.
That means, okay, when the client first comes, it really starts when they're buying the house, when they get the contract on the house, because that's the trigger to so that they're able to move forward with the closing process. There is an appraisal order, okay? There is a title order. We want to make sure the property's free and clear of all liens, different things like that. That's why I say it takes about 14 days, because it's going to take a few days to get the appraisal back, a few days to get the title back.
Right.
But other than that, we're going to move quickly on this and get it closed. Now, it depends on the scope of the work in terms of how long that time frame will be, because the lender, the private money lender, is looking at, well, this should only take you about no more than, let's say, 90 days.
Okay.
But if they think it's 90 days, they'll probably still give you 6 months, because they want to give you that cushion.
They want you to succeed.
They want you to succeed. They don't want to set you up for failure. And the one thing that I hear all the time, people say, oh, I'm getting such a good deal, the lender wants my house. They don't want your house. They're going to make money on the interest. They're not. They're in a good position doing what they do. That's their expertise, lending money, making money on lending money. They don't want your house. They want you to make money on the house. So as long as you can perform, and they're giving you more than enough time to be able to do that, you're going to make money on the house.
That's amazing.
Yes.